So in the earlier episode, we discussed how we can prepare the journal of the selling company. Let us discuss now how we can prepare the journal of the purchasing company. Now see, the journal entries and the books of the purchasing company will depend upon which method you are following. Right? Are you following pulling of interest method? Tell me, when will you follow pulling of interest method? When it is amalgamation in the nature of merger. Or are you following the purchase method? So, journal of the purchasing company, whenever you are planning to record accounting entries in the books of the purchasing company, first decide what is the nature of the amalgamation. Is it amalgamation in the nature of merger? Then you have to record as per the pulling of interest method. And if you come to the conclusion that no, this is amalgamation in the nature of purchase, then you have to record accounting entries as per the purchase method. So that is how the accounting will be affected in the books of the purchasing company. Okay. The first accounting entry that you will have to record over here, the first one that I will record over here will be for acquisition. It will be for acquisition of business of selling company. Acquisition of business of selling company. Okay. And this accounting entry will be common, whether it is pulling of interest method or purchase method, accounting entry will be the same. The accounting entry that you will record is business purchase account debit to liquidator of selling company account. This is the accounting entry that you will record, and you will record this accounting entry by the amount of the purchase consideration. Okay. So you are buying the running business of the selling company. If you are buying the running business of selling company, then you should first record this accounting entry. Pulling of interest method, same accounting entry. Purchase method, same accounting entry. Accounting entry will remain the same, but the amount by which you will record the accounting entry is the purchase consideration. Okay? Yes, let's move ahead. 2. Incorporation of assets, liabilities, and reserves of selling company. So this will be the accounting, what will be the accounting entry? As a purchasing company, you will take over the assets of the selling company, you will take over the liabilities of the selling company. Be careful with reserves. Reserves will demand a special treatment. If it is pulling of interest method, if it is amalgamation in the nature of merger, then all the reserves of selling company will be also taken over. But if it is amalgamation in the nature of purchase, then only statutory reserves will be taken over. Okay. So accordingly, you have to consider it. Right. See, the accounting entry that I will record. Tell me, what accounting entry will you record? The assets will be incorporated. Assets are having debit balance. So I will say sundry assets account debit. Isn't it? So different assets that I'm taking over, I'll be debiting those assets, right? Then liabilities will be taken over. So to sundry liabilities. So sundry liabilities, all those accounts will be credited. Okay. Now we will also take over the reserves. So we will say to all reserves account. Okay. To business purchase account. This is the accounting entry that I will record. Let me complete the whole thing and then I'll explain it in details. You are taking over the assets. Assets have debit balance, so keep on debiting it. You are taking over the liabilities. Liabilities have credit balance, so credit it. Every reserve of the selling company will be taken over. I am discussing specifically right now for amalgamation of the nature of merger. Every reserve will be also taken over. So credit all the reserves and to business purchase account. Earlier in the first accounting entry, you debited business purchase. Now I am crediting the business purchase. So business purchase account is getting closed. And all these accounting entries will be recorded at book value, right? All the accounting entries will be recorded at book value. Business purchase, obviously at purchase consideration. Obviously at purchase consideration. And there will be some difference left in the accounting entry. When you will record this accounting entry, some difference will be left. So we say difference in accounting entry is adjusted with reserves. Okay, it is adjusted with reserves. This is what you will be doing if it is amalgamation in nature of merger. Okay, remember the conditions of amalgamation in the nature of merger. Condition number one, all assets should be taken over, all liabilities to be taken over. And condition five is everything should be recorded at the book value. See, you are doing exactly the same. Assets are debited at book value. Liabilities are credited at book value. As per the pooling of interest method, every reserve of the selling company will be taken over. So that also I'm crediting at the book value. Okay. To business purchase account, that will be with the purchase consideration. And then you have to balance this accounting entry. Whatever difference is there, that will be adjusted with reserves. Either the reserves will be debited or the reserves will be credited. Fine. But what if it is amalgamation in the nature of purchase? Okay. Here also, the assets that we are taking over will be debited. The liabilities that you are taking over will be credited. We will not record anything for reserves. Be careful. Do not record any reserves. Instead, we will say to business purchase account. Okay, to business purchase account. This time, this accounting entry will be at agreed value. You are not supposed to record this at book value. Yes, business purchase will be at purchase consideration, but assets and liabilities will be recorded at their agreed values. Fine. It will be at the agreed values. And once you record this accounting entry, there can be some difference. There can be some difference. Difference in the accounting entry. Just a second. Yes. Difference in accounting entry is goodwill or capital reserve. Okay, it is capital reserve. This is what you will do if it is in nature of purchase. Nature of purchase. So if the amalgamation is in the nature of purchase, this is the accounting entry that will be recorded. Please distinguish between the two accounting entries. Assets and liabilities obviously will be debited and credited respectively, but the amounts will be different. Book value here, agreed value here. If it is amalgamation in the nature of merger, then in this accounting entry itself, record all the reserves. In nature of purchase, do not record any reserves right now. And finally, the difference will be adjusted with reserves, while if it is in the nature of purchase, difference is goodwill or capital reserve. Okay? Fine. Now, statutory reserves will be taken over by us. So, statutory reserves taken over. Your accounting entry over here shall be amalgamation adjustment reserve account debit to statutory reserves account. Okay, to statutory reserves account. In the nature of merger, I have already recorded all the results. See, all the results are already recorded. So I don't have to do anything. I don't have to record any separate accounting entry for statutory reserves. But here in nature of purchase, what happens is initially I will not incorporate any reserves. I will record a separate accounting entry for the reserves. Okay. Third, your third accounting entry is for settlement of purchase consideration. Settlement of purchase consideration. This will be a common entry for both. When I settle the purchase consideration, it will be a common accounting entry. We are supposed to make payment to the liquidator of the selling company. So we will say liquidator of selling company account debit. What are we paying them? Are you paying them bank? Credit that. Are you giving them preference shares? That means you are issuing preference shares. So preference share capital account. You might be issuing equity shares to them, then to equity share capital account. And if you are issuing these shares at any premium, then to securities premium account. Right. This is how the accounting entry will be recorded. Liquidator with the the purchase consideration. This too will be at face value, and whatever extra is there, that's your securities premium. So that is how we will be preparing the journal of the purchasing company. First accounting entry, common for both purchase consideration, business purchase account debit to liquidator of selling company. It is the same liquidator that we are debiting at the end and settling it. Second accounting entry is the most important one. Incorporate the assets and liabilities at book value, incorporate the reserves at the book value, credit the business purchase, balance the accounting entry, difference adjusted with the reserves. This is for in the nature of merger. If it is in the nature of purchase, incorporate the assets and liabilities at agreed values, credit the business purchase account with the purchase consideration, balance the accounting entry, difference is goodwill capital reserve. In merger, I have already incorporated the reserves in the second accounting entry itself. But in purchase method, you cannot take over the reserves except statutory reserves. So amalgamation adjustment reserve account debit to statutory reserves. And finally, the settlement of purchase consideration, common accounting entry for both of them. Settle the liquidator, give, credit whatever you are giving to the selling company. If it is cash in bank, credit that. If it is preference shares, then preference share capital. Are you issuing any new equity shares? Then equity share capital. This will be all at the face value. And securities premium, in case if you have issued the shares at a premium.